Hi everyone, welcome back to my channel, the 8th wonder of the world. I am talking about 5 pharma companies that are expected to give good returns during this pandemic period in the Indian stock market. Please like and subscribe to the channel for more updates and press the bell icon for more notifications from the channel. This pandemic has caused severe supply side disruptions in various sectors in India and around the world. It will be estimated there will be an earning cut by 10 to 15% for the companies in India. The pharma sector has become attractive during this period and is expected to lead the rally once all the COVID issues are solved. Even globally, the pharma companies are performing better. Be careful when you choose the companies to add to your investment. I am presenting 5 companies in pharma which needs a look during this period because of their business and the need for their products. These companies should be looked at long-term potential as the companies have already rallied. The Indian pharmaceutical sector has got a golden opportunity for the global business going forward. Let's move to the first company on the list. The company has a strong product portfolio. The company has high presence in high growth therapeutic categories, that is gastro, central nervous system, vaccines, OTC and gynecology, which has led to a better than industry growth for the company. Strong sales record. The company has seen a very strong sales in the last 10 years compared to an average 11% growth by the other Indian pharmaceutical players. The company had acquired Piramal Healthcare domestic formulation business in the month of May 2010. So the company has both organic and inorganic growth. So what is organic and inorganic growth? To put it in simple words, organic growth comes from expanding your organization's output by engaging in the internal activities that increase their revenue. So it is internal activities which comes under organic growth. Inorganic growth comes from mergers, acquisition and joint ventures. So inorganic growth is a faster way to grow compared to organic way. The company is detailed. The company is a healthcare company that discovers, develops, manufactures and markets innovative products and service. It is a globally diversified company, focuses on the products and services for treatment, care, diagnosis and preventions. The company has in-house development and medical teams to undertake the product and clinical development tailored to the needs of the Indian market. The company provides quality health care worldwide by creating healthcare solutions which directly affects the life of the common man. It has successfully developed brands under its name. It has also brought various global products to the Indian consumers such as Brufen, Thyronorm and Leptos and many more. The products of the company. In the primary care segment, it markets products in the area of pain management, gastroenterology with the well-known brands like Brufen. The specialty care segments. It provides metabolics, urology, neurology and psychiatric solutions in the area of thyroid, obesity, diabetics and prostate hyperplasia. Hospital care segment. It offers products in the field of anesthesiology and neonatology. So basically there are 3 segments. So the company is About India Limited. It's currently trading at a price of 17,880. It has a market capitalization of 38,939 crores, so which makes it a large cap. It has a PE of 62.57. Industry PE is 27.59. So it shows that it is trading higher than the industry PE. Dividend yield of 0.37%. Debt equity of minus 0.83. Return on equity of 27.91%. Price to book of 17.46. And for the quarterly results of December, the net sales were stood at 1,078.25 crores and a net profit of rupees 186.69 crores, which saw an increase from the previous quarter. Return summary. The 1-year returns for the company were 145.50%. It outperformed the Sensex by 165.48%, whereas the Sensex has given a negative return of minus 19.98% during this period. It outperformed the sector by 141.74%, and the sector returns during this period has been 3.76%. The company paid the dividends last was in the month of August 13, 2019, which was 50 rupees per share. The company has a low beta, so the adjusted beta is 0.64 with Sensex. So the products of the company are as follows. It provides anesthesia, animal health, anti-infectives, cardiovascular, diabetics care, hematology, clinical chemistry, immunology, metabolics, molecular neuroscience, nutrition, oncology, pain care, point of care, renal care, vascular and virology. So the company discovers, develops, manufactures and markets all these products. The stock returns versus Sensex return. So you can see the performance against the benchmark. So where the 1 week return is at 14.33%, 3-month return is a staggering 40.58%, 1 year, 2 years return is 110%, and 5 years return is 350%, and 10 years it's given 1914%, which is mind-blowing numbers. Looking at the shareholding snapshot for December 2019, the majority shareholders are promoters. None of the promoters have pledged their shares. It is held in 27 mutual fund schemes, which accounts to 4.98%. FIS holdings constitutes of 30 FIS, and it accounts for 1.82%. The promoter with the highest holding is About Capital India Limited, which owns around 50.44%. The highest public shareholding is by L&T Mutual Fund Trustee Limited, that is the L&T Mid Cap Fund, which has 1.275%, and the individual investors hold 14.5%, and the total promoters holding is close to 74.99%. So shareholding comparison holding between the quarters. There is no change between the December 2019 quarter and September 2019 in the promoter holdings. The FIs have increased their holdings. The mutual funds have decreased by 0.50%. No changes in the insurance companies. The other DIS holdings is reduced by 0.14%, and the non-institutional holdings is increased by 0.50%. So what makes it a value bet? It does not face the US Food and Drug Administration, that is US FDA related inspection risk, which plagues other pharma players. It has a strong sales record over the 10 years which I had mentioned earlier. The US Abbott has 1 million COVID testing kit available in the US, and this may be exported to India. This toolkit helps in testing the virus and giving results in a very, I think around 5 minutes or something. So the second company, talking about the company is fully integrated Indian Pharmaceutical company, manufacturing over 350 formulations and 80 APIs for various therapeutic segments. It is one of the world's largest manufacturers and suppliers of over a dozen APIs. These are produced right from the basic stage at the manufacturing facilities, endorsed by the world's most discerning drug regulatory authorities like US FDA, UK MHRA, EDQM Euro, and WHO Geneva, and many more. So the company is Ipca Laboratories. It is currently trading at 1,601, and it has a market capitalization of 20,797 crores, making it a large cap. It has a PE of 32.12, industry PE of 27.51, dividend yield of 0.50%, debt equity of 0.04, return on equity of 18.57, price to book of 5.96. And for the December quarterly results, it had a sales of 1,212.86 crores and a net profit of 197.61, which saw an increase over the previous period. So the company is fully backward integrated. The Indian Pharma company with a strong thrust on exports. The company is the largest manufacturer of APIs which produce right from the basic stage. More than half of their formulation business is backed by their own APIs. and the APIs and the formulations are produced at the world-class manufacturing facility. Today, the company is a therapy leader in anti-malarials and arthritis in Indian market, with a fast expanding presence in the international market as well. The company has a brand leadership in 4 to 5 therapeutic areas for both formulation and APIs. Four of their major branded formulations are ranked among the top 30 brands of India, and it has emerged as one among the top exporters of APIs in the world. The company is one of the biggest manufacturers in the world of APIs. To name a few: anti-hypersensitive, chloroquine phosphate, that is anti-malarial, Durectile, hydroxychloroquine sulfate, NSAID, that is anti-hypertensive. IPCA is one of the largest suppliers of all these APIs and their intermediaries world over. India has recently exported more of these APIs for other countries. I will explain whether this is a positive for the company in the long run or not at some point in the video after I mention of the other company on the list. So, talking about the return summary. The company has given 1-year return of 71.29%, outperformed the benchmark Sensex by 91.27%, outperformed the sector by 67.53%. The company paid the last dividend on Feb 18, 2020, which was rupees 5 per share. The company has a beta which is medium of 1 with Sensex. So stock returns versus Sensex over a period of 10 years. You can see that 1 week return has been 14.85%, 6 month has been 85.45%, 2 years has been 139.28%, and 5 years return has been 143.13%, and a 10-year return of 500%. Shareholding snapshot. The majority shareholders are promoters. None of them has pledged their shares. It is held in 27 mutual fund schemes, which accounts for 22.76%. 204 FIS who have stake in the company, which accounts to 13.99%. The promoter with the highest holding is Kaizen Investment Private Limited, having 21.383%. The highest public shareholding is DSP Small Cap Fund, which has 6.31%. The individual investors hold 10.3%. The total promoters holding stands at 46.07%. And the insurance has 1.59%. Shareholders comparison between December 2019 and September 2019. So there has been no change in the promoter holdings. The FIS have reduced their holdings by a minus 2.15%. Mutual funds have increased their holdings by 1.24%. Even insurance companies have increased their holding by 0.81%. The DIS have reduced by a marginal 0.19%. The non-institutional holdings have seen an increase of 0.29%. So, what makes it a value bet? The hydrochloroquine is mainly supplied by IPCA company and other companies that I am mentioning next to India and worldwide. They hold close to 70% contribution in the world market. It is needed in the so-called worldwide improvement in COVID treatment. So it has potential to help in the COVID related cases. The stock has run up by 30 to 40% in the near term. So the third company on the list was incorporated on September 19, 2005 at Hyderabad, Andhra Pradesh. The company's strategic and early investment in the R&D and the manufacturing infrastructure have enabled it to become one of the leading API suppliers in the ARV therapeutic area and to multinational pharmaceutical formulation companies which cater to a large and fast growing donor funded access to medicines market of the sub-Sahara Africa, Southeast Asia and Latin America. During the financial year of 2016, the company sold its APIs in 32 countries. The company is also growing synthesis and nutraceutical and cosmeceutical ingredients businesses. Further, the company is increasingly focused towards growing its integrated generic finished dosage forms, in which it has made significant investments over the last 2 financial years. The company operates in four business lines. That is the generic APIs, generics FDFs, which is finished dosage forms, synthesis and ingredients. The company's generic API business comprises the development and manufacture and sale of APIs and advanced intermediaries. Its generics FDI business comprises the development and manufacture of oral solid formulations. Its synthetic business includes contract development and manufacturing services for global pharmaceutical companies, and its ingredients business comprises the manufacture and sale of specialty ingredients for use in the nutraceutical and cosmeceutical sectors. The business area of the company is it is a leading research and development driven pharmaceutical company in India with a leadership position in generic active pharmaceutical ingredients, that is the APIs, for select high growth therapeutic areas of antiretrovirals and hepatitis B. It also manufactures APIs in oncology and other therapeutic areas, which is highly skilled products to be made. So the company is Laurus Labs India. It is currently trading at 412 rupees. It has a market capitalization of 4,357 crores, which makes it a small cap. It has a PE of 22.47, industry PE of 27.59. So it is trading well below the industry PE. A dividend yield of 0.76%, debt equity of 0.61, return on equity of 8.21%, price to book of 2.62, net sales of 729.59, and net profit of 73.48 crores. So this is the results of quarterly results for December 2009. So the 1 year return has been 2.63%. It outperformed the Sensex by 22.61% but underperformed the sector by a minus 1.3%. So this has been a laggard during the period where the pharma companies are rallying. The latest dividend it paid was of 1 rupee 0.5 per share, which was on March 23rd, 2020. So it has a high beta of 1.35 with Sensex. So the stock return versus Sensex over the period. So the 1 week return has been 27.38%, 3 month return has been 4.56%, 6 month return has been 24.12%, and 1 year return has been 2.63%, and it has given a negative return during the last 2 years and 3 years period. So you can see that the stock has underperformed the benchmark index from the last 2 years. The blue line which indicates Laurus Labs, and the other lines are the benchmark of S&P BSE small cap and S&P BSE healthcare. Now coming to the shareholding pattern as of December 2019. The major shareholders are the promoters, and they have pledged 32.27%, and it is held in 11 mutual fund schemes which contributes to 4.92%. 69 FIS have holdings in the company which accounts for 10.52%, and the promoter with the highest holding is Satya Narayana, holding 17.62%. The highest public shareholder is Blue Water Investment Limited, which accounts for 19.632%. Individual investors hold 16.05%, and the DIS hold 27.18%. Comparison of the shareholding pattern between the two quarters. So there has been a decrease in the promoter holdings by 0.15%. Even FIS have reduced their holdings by a minus 2%. In mutual funds have increased by 0.02%. And the non-institutional investors have increased by 2.20%, and there is a decrease in the DIS holdings. So why the company should be a value bet? The financial trend is good. The quality of this company is even superior compared to the other pharma big companies. It has excellent leadership team in the company. The company possesses complex medicines like ARVs, APIs for HIV, hepatitis and HCQ. It can be a big player in the future. Coming to the fourth company on the list. This company was incorporated in 1995, is part of the famous conglomerate group. The company operates in the areas of active pharmaceutical ingredients, that is APIs, to formulations and animal health products to Cosmeceuticals. The company is one of the largest privately held pharmaceutical companies in India, headquartered at Ahmedabad in the state of Gujarat. Over the last 5 decades, it has been developing and manufacturing pharmaceutical products and selling and distributing these in over 50 countries around the world. An integrated healthcare solution provider with a pharmaceutical product basket, it caters to over 45 therapeutic areas that includes cardiovascular, gastrointestinal, anti-infectives and antibiotics, respiratory agents, anti-diabetics and immunologicals. The company focuses on providing high quality, appropriately priced products to its customers and supports all this with a dedicated customer service. The company has a multicultural, multilingual and multinational workforce of more than 4,000 employees, including over 200 people outside India in 49 countries of Africa, CIS, Japan and US. The company is headquartered in Ahmedabad. So there are 8 of the manufacturing facilities have 4 formulation plants. The company's 2 API units are at Ankleshwar, manufactures a wide range of APIs and intermediaries including 3 US FDA certified products. The manufacturing facility at Samba near Jammu started its commercial operations in August 2006. The first overseas formulation facility of the company commences operation in Ethiopia. The company has in-licensing alliance with the global multinational companies. Now talking about the products of the company, it has formulations and consumer product divisions. So under formulations, the company is one of the leading players that caters to various therapeutic areas such as cardiovascular, gastrointestinal, respiratory, pain management, CNC, anti-infectives, oncology, neurosciences, dermatology and other segments. So this manufactures its formulations in various forms such as oral vaccines and inhalers. The company has a portfolio of 200 products and has created many brands. Now the consumer division. This is the healthcare division that has brands like Sugar Free, Nutrilite and Everyouth. It's Sugar Free has a range of sugar substitutes. Nutrilite is a cholesterol free spread and Everyouth has a range of skincare products. The company is Cadila Healthcare Limited. It's currently trading at 350 rupees. The market capitalization is 36,957 crores, which is a large cap. It has a PE of 25.07, an industry PE of 27.59, dividend yield of 2%, debt equity of 0.57, return on equity of 15.18, price to book of 3.48, net sales of 3,638 crores and a net profit of 373.90 crores for the quarter ended December 2019. So the 1-year return has been 2.53%. It has outperformed the Sensex by 22.15%, underperformed the sector by a minus 1.23%. The company paid dividends of rupees 3.5 per share on March 23, 2020. So the company has a low beta of 0.57 with Sensex. Talking about the returns versus the Sensex returns over a period of 10 years. 1 week return has been 32.92%. 3 months has been 35.85%. 6 months has been 48.29%. And the YTD return, year to date return has been 37.96%. So it has underperformed in the 2 years period and 3 years period and 5 years period. In the 10 years return, it has been 208.52%. Talking about the shareholding pattern. The major shareholders are the promoters. None of the promoters have pledged their shares. It is held in 24 mutual fund schemes, which accounts for 7.11%. And 133 FIS have holdings in the company, contributing to 4.58%. The promoter with the highest holding is Zydus Family Trust, which holds 74.861%. The highest public shareholding is by Life Insurance Corporation of India, which has 3.69%, and the individual investors hold 5.3%. The non-institutional holders have 7.8%. The other DIS have 4.49%. So shareholders comparison between the 2 quarters. So the promoter holdings has not decreased, but there is a decrease in the mutual funds and the other DIS and non-institutional holding. And during this period, we can see the FIS and the insurance companies have increased their holdings. So why this company should be a value bet? So the first point is providing the hydrochloroquine to the US and other countries. The company is waiting many approvals from the US. So once that is done, it will be helpful. It can benefit from being an API player. Now coming to the discussion about whether hydroxychloroquine effective treatment for COVID, why the hype? This is not a cure for corona, and the experts and the doctors around the world do not support this completely. The medicine is under clinical test. This is just a preventive medicine for the workers who are in the front line treating the COVID patients. So basically this is helpful for the health workers. So during the clinical testing, if more patients in the USA recover from COVID related issues, the Indian companies will benefit. Right now, the benefit of this medicine is not yet proven entirely, but the future of IPCA and Cadila will provide excellent growth. If there are more recoveries, then there will be a large scale production from these companies, as they have to export to the other company, as they will be exporting to the other countries worldwide. The shipment of anti-malarial drug hydroxychloroquine to the US is likely to start next week. A leading pharma industry board has confirmed, which I came across the news. The hydroxychloroquine is being touted as a game changer in the fight against COVID-19 pandemic as per the US. The Indian companies are committed to meet both the domestic and the export commitments. So India manufactures 70% of the world's supply of hydroxychloroquine. So companies like Cadila, IPCA are the significant hydroxychloroquine manufacturers in the country and worldwide. So let's see how this progresses concerning the treatment. So if you are planning to buy, do not buy in huge quantity for now. It may see profit taking as the stock prices have already gone up. So coming to on the list. This company is a risky bet, and I suggest the investors with a high risk appetite can look at this company. The company was originally incorporated on 22nd September 1988. The company was promoted by A.M. Rao. In 1989, Santoshi Varaval and Subhash Varaval acquired Amgi Pharmaceutical and Chemical Limited and commenced manufacturing of bulk drugs in 1991. The company's manufacturing unit is located at Bidar, Karnataka, where it was originally engaged in the manufacturing of active pharmaceutical ingredients, that is the APIs, and the bulk drugs like ibuprofen, etc. However, due to the downward price movement in the products of the company during 1995, it gradually moved over to the manufacturing specialty chemicals and cosmetic ingredients like triclosan and Avis, etc., catering to the global and the domestic markets. So they were as per what I have taken from their website, they are like touching lives on another front. They are fighting microbes in the home, in the kitchen, in the linen and more. Their antimicrobials deliver clean living. Their high-end chemistry also coats the screen of mobile telephone and cars' photochromatic windscreen. For the photography industry, they remain a timeless answer. Their photosynthetic and photographic chemicals have been products of choice for decades now. So the product range of the companies include. So these are the following. So the company is VV Med Labs and it's currently trading at rupees 12.27 rupees. It has a market capitalization of 100 crores, which makes it a micro cap. It has a negative PE of minus 1.92. The industry PE is 27.59. The company has not paid dividends for a while. It has a debt equity of 0.74%. Return on equity is for 0.58%. Price to book of 0.1. Net sales of 62.77 crores. The net profit was negative during the December quarter of minus 4.53 crores. So 1 year return as a negative of 5.169%, 51.69%. So it has underperformed the Sensex and it has underperformed the sector by a big margin. The company has a high beta of 1.50 with Sensex. So the stock return versus Sensex. So you can clearly see on the long run the company has underperformed the Sensex. But the 1 month return has been 30.95%, 1 week return has been 64.70%, and 1 day return has been 9.95%. So coming to the shareholding pattern. Majority shareholders are the non-institutions. The promoters have pledged 66.37%, which is a very bad thing. It is not held in any mutual funds. The 10 FIs have a holding of 3.56% in the company. The promoter with the highest holding is BBR Projects Private Limited, which is 14.84%. The highest public shareholder has 11.03%. The individual investor holding is 36.49%. So from this it is evident that the non-institutional holdings have the majority holdings, are the major shareholders in this company. Looking at the shareholders comparison, there has been no change in the promoter holdings. The FIS have decreased by 0.07%. The non-institutional holdings has increased by 0.46%. Why this should be a value bet? The price momentum looks good in the short term. It is a good API and specialty chemical manufacturing having US FDA plans. Talking about the risks, which is the investors should be cautious. The company is a micro cap. The price had corrected badly even before the COVID issues. I think it was trading around 100 rupees even before the COVID issue was prevalent in the Indian stock market. So it is a highly risky bet, but it can benefit with the pharma and chemical sectors gaining during this period. Thanks for watching this video. Please like and subscribe and press the bell icon for more notifications from this channel. This content is intended to be used and must be used for educational purposes only. Please do your own analysis before making any investment based on your own personal circumstances and consult your financial advisor.